Greetings traders, this is Houston Trung from thetradingedge.org, and here is the market outlook for April the 5th to the 9th, 2021. So first off, just want to thank you for tuning in again to this week's market outlook video. If this is the first time you're joining us, then what you can expect out of these videos is basically a price analysis of the week's price action, as well as an outlook in terms of price for a number of asset classes that we cover. Now, what was significant this past week was that we finally got the end of the month of March, and we got the end of Q1. So this past week we saw what we expected, a bit of window dressing, as we always do at the end of the month, at the end of the quarter, as firms, institutions sort of close out their books, dress them up, and they get ready for the new quarter. So we saw a bit of that juggling around. And we saw the markets sort of digest that news that came from that forced selling out of Archegos. Archegos is that big story where, that highly levered fund or family firm basically levered up, I think it was maybe 50 times or whatever the number, 100 times, and it basically blew up. So we saw a lot of individual names, a lot of carnage in some individual names play out over the past week. But if you looked at the indices, you didn't see that at all. So that was the big disparity this past week. Was everyone was waiting for the volatility to hit the tape. We were looking at the SPY and the Russell and the Dow and the Qs to see what was the next shoe that was going to drop. But at the end of the day, the markets, some of them hit all-time highs, specifically the SPY. So even though there was potentially a lot of damaging macro news, so we're still on the lookout for higher inflation, even though we had a huge leverage blowout, there hasn't been any contagion. And for the most part, it seems as though we're in a raging bull market across asset classes. Obviously, SPY, as I said already, cracked all-time highs. It actually closed above the 400 level, SPX above 4,000, and the cryptos are flying. They're in a raging bull market as well, and they're hitting all-time highs. So we'll talk about that this week. We'll focus on our usual basket of assets to cover, and I'll give you some things to look for in the coming week. So let's jump to the charts now, and that'll tell the story. So as we always do, we begin with our VIX chart, and VIX, it's just telling the same story over and over again. So VIX is now going into all-time lows. Now we can't tell if this is all-time lows or not, because the VIX basically reverse splits every time it gets too low. But at this point here on this chart, it is the all-time lows. So unless something happens and the VIX can somehow reverse and pop back up again, at some point Barclays is going to have to reverse split this thing so it doesn't go to zero. And that's it happens every couple of years. They have to do a reverse split, or every year or so, as this thing eventually will just decay and go to zero. So VIX is going to all-time lows, but the actual VIX itself, the VIX, the Vix Index, is trading around 20. So if I look at the VIX right now, we're trading around the 20, which is still a decent level. There's still volatility in the markets, so this is nowhere near as low as we were back in 2017, 2018. We were trading as low as 8. So this is, we're still trading double the amount of volatility based on the VIX that we had 2 years ago. So we're not back at those ultra low levels of volatility yet, but we're getting there, right? And at this point here, the markets seem to be sort of slowly removing the fear and discounting bad news. And we're seeing equities run up back to highs or to all-time highs. So for now, back to the VIX chart for a second. The reality is that, on a higher time frame, this thing is melting, right? So here, we've been on top of this one for a long time now, and we pointed this out, the outside, inside, and down, and it's a continuation move, right? So until you can get a reversal on a monthly chart, you're not going to see a large reversal on the VIX. So the prior month's high was right there on the VIX. And so for this thing to reverse and to create a higher time frame reversal, it has to break over March's highs, which is a little hard now because the month of March we had a minus 28% pop. So in order to create a higher time frame reversal, which is more significant than lower time frame ones, obviously, price should have to go from here all the way back through the range to take out that pivot high. That's really far away. Sorry, that's actually the wrong color there. I'm going to redraw this. I like to use the orange lines to indicate the monthly pivots. And that's really far away right now. So the chances of that happening are slim, but we want to keep our eye on it. In terms of the weekly chart, this is what I'm looking at, is that now the VIX is clearly doing a Bollinger Band walk to the downside. So we can see now we finally, this past week, we broke below the prior bar's low. We are in the Bollinger Bands now, and so we're doing a Bollinger Band walk. This means price can continue to get extended to the downside. The Bollinger Band walk doesn't get extinguished until you break above a prior bar's high. So this coming week, what I'll be watching for is the following. So we now know where the monthly and the quarterly open is. So we'll go to the daily chart here so you can see that. We now know where the monthly and quarterly open is. That's that blue line there, okay? So we have an orange and blue line at the same level because that's the monthly and quarterly open. This coming week, we want to see, can it break above and trade above that level? Because if it does, that will actually be full time frame alignment to the upside, right? That means you'll be trading above the quarterly, above the monthly, and likely above that weekly as well. So that'll be full time frame alignment to the upside. That in itself would be positive. The problem is that you're doing that Bollinger Band walk to the downside on the weekly. So you need to somehow, if you're going to be bullish to the VIX, you have to break above the the levels I indicated, right? Those opens, and then you also got to break above that purple line. That's the prior week's high. That will extinguish the Bollinger Band walk, and that's when you really need to pay attention because then you can pop back up here. Until that happens, though, that you still gotta maintain that bias to the upside. Any pops on the VIX until it can clear that level, in my opinion, should continue to be sold. And you haven't lost a lot of money being a seller of the VIX over the course of the past 2 years. So yeah, VIX continues to be trending to the downside. Once again, if it breaks, but if it stays below the monthly, quarterly open, below the weekly open, then continue to fade the VIX. And we can continue to expect to see newer highs on the SPY. Let's jump to the SPY now. So we'll go to the SPY chart. The SPY has been on a roll. So let's go to that 3-month chart. Refer to this chart because we have a fresh quarter here. We've had now 3 consecutive quarters of higher highs. There's your outside inside that we pointed out many moons ago. Outside inside, up, up, up. Any fear that that we had from the pandemic, you're not seeing it in the charts, right? So yes, there are some underlying names that don't look so good, but the indices have shrugged those off and they've made all-time highs. Look at the SPY closed at 461 near those all-time highs. The SPY continues to be, the strongest of the markets in terms of just where it is on its chart, and that is you have nothing but blue sky above. So SPY now, there's your all-time highs. And to create a reversal, just like on the VIX, right? If you want to see a bearish case, it means you have to take out this past month's lows. March's lows right there, 371.88. You've already broken above March's highs in April. So that means price has to come all the way through here, right, to create a reversal bar. Even if that happens, that would be an outside bar, right? So being forward looking, this is how you want to be thinking of things. You want to be thinking of things in terms of the price action. So what kind of bar would that create if somehow the sellers could create an outside bar, right? That means they take it from one side to the other side. It would be a red outside bar, but it would look something like this. It would look like an outside bar like that. Now, is that bearish? What do we know about outside bars? It's not significant enough until you see a break of the outside bar, okay? Because if it does this, and you'll see this over and over again as we go through these asset classes, the momentum can quickly get extinguished when the buyers sort of fight back and create a stalemate by creating an inside bar. And we now know what happens is that when you get an outside inside, whoever wins that battle is going to take it, right? And that's what happened the past several months. So we had the outside inside at the end of October, and then look at November, and we've been off to the races ever since. So we've had no lower lows here in the SPY since the month of September. So in fact, we've had 1, 2, 3, 4, 5, 6 consecutive months of higher highs on the SPY. That's how you get to all-time highs. This coming week, watching this 2-day chart, because it's momentum. It's momentum. We closed it. We're very, very strong on Friday. Here's the Friday close, right there. Right, that's a squeeze. Right, that's a break higher. Some window dressing. People get back in the names again on the Thursday. Thursday was the first day of the month, first day of the quarter, and basically closed it up 1% plus. And so the 2-day chart looks like that. Right, you got your momentum up, Momo up move, and as I pointed out, a couple weeks ago, we had the Momo down scenario, got extinguished right there when they broke above the inside bar, and now it went Momo up. And so anyone who got short here, if they didn't cover, they're getting the squeeze or they got stopped out. Okay. Well, SPY At this point, no reason to believe we can't see more all-time highs. As we know already, the VIX is doing that Bollinger Band walk to the downside, and the SPY hasn't hit the Bollinger Band high yet. So we could definitely have more room up here before it even has to begin to do the Bollinger Band walk. All right. So let's go to the Qs now, and the Qs begin to pick up steam. So on the Qs chart, man, this thing's been up, I think it's 4 consecutive quarters in a row. Momo up, by the way, right? So Momo up, 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 4 consecutive quarters of higher highs, right? So it's a whole year of higher highs. So this past quarter, we ended, kind of, it's green, but it's, you could argue it's a doji. So not a very, very strong quarter, still up 1.72%. But here's the bear case, if somehow the bears can step up this coming quarter and break below this red level, that's this, this past quarter's lows, that would create a reversal on that quarterly chart and extinguish that Momo up move. But until that happens, this kind of up and down move, it's all intrabar volatility. So until that happens, you still got to remain bullish because this price action here takes precedent. That means there's going to be dip buyers until that level can get taken out before those guys get stopped out and they get hurt. Once again, I think I've said it a few times already in this video. I think we're in a raging bull market, and the risk is more to the upside than it is to the downside at this point. That's the danger, right? Is that we continue to go Momo up, and things get very, very stretched, very, very frothy, even frothier, bubblicious as people would call it, and we could see significantly higher prices, which then creates even more danger in the markets. But as I've said in the past, right, we're traders here. People who watch these videos are all traders. And as traders, we like volatility, right? Volatility is a trader's dream and a portfolio manager's worst nightmare, as the saying goes. So we like volatility, and because it gives us range. As I'll talk about later, one of my favorite markets to trade right now is the crypto market, because the range is there, the volatility there is so high that the profit opportunities, just the trading opportunities, are phenomenal, and we'll talk about that near the end of the video. So this past week, we already cracked above March's highs. So we had a price reversal right here on the month of March, but that got repaired. I said it many times last month that when we broke below Feb's lows, it looked bearish. Remember that when we had this bar here? At one point we were trading down here. As I was watching, it would not take much for the buyers to fix this chart by taking it back into Feb's range and then by closing it somewhere higher up to create maybe a bullish hammer. Now we didn't quite get a green bar because we didn't have a big body there, so it's kind of a doji, but you'll get a price reversal. You can break above March's highs. We did that already in the first week of April. So that's a price reversal once again, down, up, and now we're going after those all-time highs on the Qs. Because on the weekly chart, we've been on top of this move. I've been calling it for a couple of weeks, actually more than that, maybe 3 weeks now, since this happened. Right? We had a Momo down. That looked bearish, but what do we know about Momo down scenarios? We know how to watch, and we know how to see when it signals the ending of a Momo move, and that's when you get a higher high. So here we had a stalemate, right? There was an inside bar that basically created a stalemate between buyers and sellers. The sellers could not step up any further, push price down any further, and then you had an inside bar up. So that extinguished that Momo down move. And once you get that Momo down reversal, if price can get aligned with time frame alignment, then you'll go back to that pivot high. That's what we're going after now, because we had a couple weeks of chop here. This is all chop or consolidation, right? If you can break back above this high and stay above there, we're going back after that pivot, especially now that we have this time frame alignment. We've got the fresh quarter, the fresh month, the fresh week. If those things stay aligned, we're going to go higher and go back after that pivot high right there. So I think one important distinction here, one important lesson that I think I've been harping on the last little while, because I think people are getting, maybe it's not clear, is that I think it's very beneficial to understand when you're trading in markets that are directional and when you're trading in markets that are non-trending, right? So they're pretty easy to identify. Directional moves are when you have bars that are not overlapping that much. So this is fairly choppy but it's still directionally upwards, right? Because you're getting higher highs. This here, right, over the past few weeks, that you see a lot of overlapping bars. So this bar here, followed by this bar trades inside of that bar. This bar trades inside that bar. This bar, right, breaks above but trades back inside that range again, likewise with that bar. And finally, this bar here finally breaks outside of this range, although you're still inside of that bar there. So if you just understand the price overlap and you train your brain to see the overlapping, then what you'll know inherently is that you're trading in a market that's consolidating, or there's some sort of price consolidation or some sort of non-trending property to that market. If you can't see it like that, if you can't see this is consolidation, then Andy, one of the members of my room, actually, is my cousin, and he found a very simple way to visualize it, and that's just basically to use different time frames. This is why I use a whole bunch of different time frames in these videos, so that it's very easy to tell the picture. If your brain hasn't been trained yet to see this as overlap, you simply use a custom time frame, like a 2-week chart. So if you take a 2-week chart instead of the weekly chart, you'll see this, right? There is an inside bar that represents the past 2 weeks action. And you can see now that we had a break this past week above the consolidated period that we saw 2 weeks prior. And so now finally the Qs are finally breaking out above this consolidated period. We had a Momo down move, one inside bar, and now going back to those all-time highs. So whatever is easiest for you to use, this is why I think it's useful that you use multiple different time frames for the analysis. At the end of the day, what's important, as I said before, is just to understand the different characteristics of those markets you're trading. Are you in a trending market? Is it directional? Or is it choppy slash in a consolidation type of environment? So using those custom time frames make it simpler to see, until you can train your brain to see that this action here is basically inside bar action on some custom time frame. Okay, so let's move on now. That's the Qs, the Dow. Let's move on to that one next. Dow chart next. Dow, boy, this thing has been also moving very, very well, getting close to all-time highs once again. The Dow, just like the rest of these indices, man, I think we also have the outside inside on this one. Yeah, outside inside on the quarterly chart, right? And it's been 1, 2, 3 consecutive quarters of higher highs. Still currently an inside quarter to be in the quarter Q2, but at this point here, we haven't had I think we've had, was it 1, 2, 3, 4, 5, 6? Did I count right? 1, 2, 3, 5. Yeah, it's 5 consecutive months of higher highs. So this is a raging bull market, right? So this is what this is why I'm saying I think we're at a bigger risk of higher highs and of actually maybe some sort of blow off or melt up versus a collapse to the downside. So now we have something interesting on the Dow. So 2 weeks ago I said you got to watch out, because you're at the Bollinger Band highs. If you break below that, you can't do the Bollinger Band walk. Then you're definitely going to get some people get stopped out. We saw that 2 weeks ago, right? It happened here. People got stopped out, tested some levels, and now this past week we got a higher high again. We're back into the upper bands again on the Bollingers. And so this coming week you want to see, how does price transact? This is a very small bar. It will not take much to break below this prior week's lows. You can again flush people out here, stop some folks out before it comes higher. So that's the issue when you have such a small bar here, that the sellers, if they really want to, they can step up and take out some stops. But as we see it here, right, we've got the inside bar reversal on Friday. It's very, very tight trading action here, right? So look how tight that is, right? So this is all of this here is trading inside of that bar, right? So if you can't tell what that is, that's basically a consolidation type of environment. But you do have small price action here now where you can see that people are getting stopped out. So inside bar, and it went up and it went down, but guess what? It's an inside bar. It popped back up again, and this high is exactly that bar's high. 331.60, that's 331.60. So that's exactly the same pivot. Then we got short down here, thinking they're going to try to get short. They got stopped out here when it took out that bar's high. So trading very, very tight right now on the Dow. That's why it's such a small range here for the week for the last week of March. So Dow, it is trading Momo up. Expect this thing to perhaps run higher here. So there is your Momo up inside bar move now. Which way does price break on Monday, Tuesday? This is a two-day bar. This is why I use the 2-day bars. For you folks who don't know why I use 2-day bars, I kind of explained it already, alluded to, the benefit of using custom time frames. But I was initially inspired to look at the 2-day bar because, I used to be a big fan of Heikin-Ashi bars. And Heikin-Ashi bars, if you haven't heard of them, they basically just aggregate or summarize or I mean, even easier way of saying it is they just basically are an average of 2 bars. So basically take the high and low of the bar and then divide it by 2, and that creates the Heikin-Ashi bar. So you can just basically use a 2-day bar to basically visualize the same thing. So the Heikin-Ashi bars are useful because they smooth out price by creating an average out of it. Well, you can do the same thing, but keep some of those levels, the highs and lows, so you don't smooth things out too much by just using a 2-day bar. And I find that very useful sometimes just to visualize the price. And now we got a Momo up move on the Dow. We break above that inside bar here on Monday, Tuesday. That's going to be a continuation of the upside, and we'll get another. We'll get back to perhaps those all-time highs on the Dow very, very quickly. So there's your Dow move. Russell also on the hunt to go back to all-time highs. Russell has really been on a roll. Look at the monthly chart. 6 months of higher highs, right? 1, 2, 3, 4, 5, 6. We had a red month here for the month of March, but we closed right in the middle, and right now we have an inside month on the Russell. So the bear case is if it can somehow come through this range, take out that low, that'd be significant, right? So if somehow price can take out March's lows, that'd be very significant because you're gonna have full time from alignment with the downside. We got the monthly open here, we got the quarterly open there. If price can trade down here, that's full time from alignment with the downside. That being said, we do have this broadening formation here that I drew many moons ago, and it's kind of holding the price action here now. I'll redraw it there to fit it. It's been holding, so unless we can break below, right, and come back through this range, then there's a chance for it to come back through here. But if we stay above this broadening formation's upper trend line, we get higher prices. So there's your Russell chart. So on the 2-day chart, nothing much to talk about that one there. We had that small Momo down reversal move to the upside, and now things are trading with full time from alignment. Let's see how things open on Monday. TSX, nothing much to show there other than that this thing is still rallying. TSX also situation now where it's had 5 months of consecutive higher highs, very close to trading once again, back to those all-time highs. I expect this thing to continue higher here now. As I said already, there's so many asset classes that are moving close to all-time highs that it's hard not to be very bullish on these markets, even though there may be some things under the scenes that are a little bit dicey. The fact is the price action is showing us that the trend is still higher and the structure is not that weak yet. If we were just trading Momo up, then I'd be concerned about the price action because the structure would be weak. But right now we've had pullbacks, we've stopped out people, and as I said in the past, is that really good rallies are built on the backs of broken trades and broken traders, right? So when you see price recover after a pullback, that is significant because this means that stronger hands are stepping in, buying those lows, buying those pullbacks, and these fresh set of hands are stronger than the ones that got stopped out. So even though we saw all that carnage with the Archegos sell-off, and we saw a number of individual names like the Discas of the world, DISCA, get just destroyed, right? So here's look at the price action on Disca. You're not seeing that in the overall markets. So I think there are definite reasons for that, why we're seeing individual names getting crushed, but the indices are staying high. We're not going to get a chance to talk about those. We'll just focus on the price. But this is still strong for the overall markets because markets, it appears, are walking up this wall of worry, and they're discounting these types of blow-ups because right now they're not affecting the underlying prices of the indices. Let's jump TLT. All eyes on bonds, right? That was the scenario 2 weeks ago as things really started to pick up to the downside. But the bonds right now, we're kind of in a place where, as I said, alluded to previously in other videos, is that we got extended very quickly, and the pivot that we wanted to go after on the bonds got hit already. So on the 3-month chart, the quarterly, we're looking at that inside bar reversal, right? So inside bar up reversal, we're looking for that pivot to get taken out. Did it get taken out? Yes, right? So that was the pivot right there. It got taken out. We saw that already. We noted that, and so now we have a fresh quarter. Now, even if we see some buying in bonds, this is actually, this is what kind of expect. I think we have a bit of a bounce now in bonds. I don't know for how long though, but this is what I expect, is that so long as you can stay above the monthly, quarterly open, we may see a bump, sort of a pullback in bonds, as we may have gone down a bit too fast. Price may have gotten ahead of itself. because here, look at where we're at in terms of the 3-month chart. We're right inside the prior month's range. It's going to take a lot to clear this past quarter's action, right? So what's the chance of the buyers breaking above Q1's highs? That's very very difficult task just based on the ranges alone. There's a higher chance we break back to the downside just because we're closer to take out the lows and the highs. More than likely, unless another shoe drops for the bond market, we're probably going to create an inside quarter. Okay, so that's what I'm watching for now, and I'm watching to see if that condition changes. On the monthly chart, same thing here, right? So how do you get outside, or when I say you, how does the price of bonds get outside the past month's range? If you cannot get outside the month's range, you're going to be overlapping here, and it's going to be an inside month. So any kind of price bounce is good, as we know. With the sell-off in bonds, that was very negative for tech stocks. It's also very negative for gold. And we'll see that gold and bonds have been trading very, very closely together as they're linked because of the interest rates. So here, this month here, we may see a green month, but until you can take out the prior month's high, it'll still be an inside bar. So that's what I'm watching for, is how far can this rally take bonds, and can it clear last month's high, that orange line. So right now we're trading down here. We had a small price reversal. I said, here, if we break above that pivot high there, we did, 2 weeks ago, we may see some short covering. And once again, how far did this move take it? We have the monthly quarterly open down here now. And how far does the thing go? Can it take out last month's high? That's the level to be watching for, to see if we can actually move significantly higher in bonds. Likely that once again, eventually some sellers will step up, because you still got that quarterly inside bar. So until you can clear that, it is still trading as an inside condition. You can expect to have some back and forth action there with bonds. But for now, on the shorter term time frame, the daily chart, it's a Momo up situation. So we may get a multi-week move here to the upside, but there's that monthly pivot. Can it take that 141 area out? That's what I'll be watching for now. There are buyers in bonds, so we should see a bounce in perhaps tech if this can continue to move higher, and a bounce in gold. Because gold, even though it did break its quarterly trend, right? So the gold futures contract here, we had a really nice Momo up move for a number of consecutive quarters, and I've been pointing out this chart for a while. It got extinguished back here, right? Back in Q1, it got extinguished, and now, just like the bonds picture, is can gold? Do you think gold is just going to rally back to all-time highs? The only way that can happen is if you can somehow clear above last quarter's highs. That's a really big range to cover for gold. All right, so more than likely, and again, I'm totally open to being proven wrong, but more than likely, we stay inside quarter, and I'll be watching to see. My opinion will change very quickly if we begin to challenge these levels, and it looks like we can break above the past quarter's highs. But for now, it's inside quarter action, and it is. We did see some productive price action though for gold, because we did get some folks to get stopped out, and so we always like to see. We like seeing people get stopped out because those are going to be the weaker hands. Then we want to see if actual buyers step in and hold those positions. And that's what they did this week. So here, it went inside week down. Anyone who tried to call a bottom down here, they got tested. If they got shaken out, they were weak hands. Then the guys who held though, and the new buyers stepped in, those are the stronger hands. Now, if we go inside bar down and back up again, that's an inside bar reversal, right? And we know where the quarterly open is down here, the monthly open. If you break above that pivot high, you'll have a green week as well. So have an inside bar reversal upside. Once again, you still got to clear that 1757.30 area, that orange line, to create that monthly reversal on the bond chart. Sorry, on the gold chart. That monthly level's right there, right? So above there. If you get that break above there, yes, price can go higher on the gold chart. Again, you still got to clear that quarterly chart, so it's not kind of open season yet, but you can certainly get a multi-week bounce here if this continues the move. Not advocating shorting here, even though the broader trends are still pointing down, like the quarterly chart, because you have that time frame alignment. You're gonna have a green week, a green month, and a green quarter. You may get a multi-week bounce, and that would be a playable move. But just be aware that you're still going to be trading inside quarter until this red pivot gets taken out. So it's that understanding of price, putting together these puzzle pieces, sort of like a four-dimensional chessboard, where each dimension is basically your different time frames. Okay, so there's your gold chart. Now, it's nearly done the video here. Now let's talk about a couple more charts cryptos, man, cryptos have been on fire. Actually, on gold, one more thing to say here. We've got a Momo up situation on gold. So Momo up now. April the 1st right there. So you got a Momo up. Let's see how far this thing takes it. So as you see, we have a lot of Momo up moves to begin the week, this coming week. So right now, there's the buyers stepped up here. They're defending, and they have a bit of price momentum with them. So you want to see how far it takes it. And once again, because we know where the quarterly and monthly opens are, we know that those levels are going to be defended. And if they don't get defended, that will be significant. So that's the areas that I'll be watching for. So let's do a couple more press charts, and then we'll wrap things up. First off is Bitcoin. Man, this thing has been on fire. And this past week, we actually had a bit of a slow week for Bitcoin, but the altcoins really rallied. But Bitcoin still, man, if that's not a raging bull market, I don't know what is. We've had how many consecutive months of higher highs? 6. 1, 2, 3, 4, 5, 6. 6 months of higher highs on Bitcoin. That move there, again, took it from it opened the month here of October. This feels like a long time ago, but it was trading at 10,800 roughly, and now we're trading at 58,383. So man, quite a significant move over the past 6 months. No lower lows for the past 6 months. But the Bitcoin chart, I think we get higher highs still, even though this week has been kind of tight trading. That's because we did get the inside bar reversal here on the weekly chart, inside bar down, and then you get that reversal right there. All right, so more than likely we take out that pivot high, then we get the all-time highs on Bitcoin. I'll be looking for entries to get. I'm still long Bitcoin, by the way, so I'm still long Bitcoin. I've been trading in and out of it, but I still got a core position. Not selling anytime soon. Probably gonna. I'll differentiate between my trading of Bitcoin and being a hodler of Bitcoin. I do both. So I trade Bitcoin, and I have a core holding position which I do not trade. That I keep. And I'll be diamond hands on that until it's not until it hits a specific price, but until I see the macro conditions change. So as an investor in Bitcoin, I have no reason, as I think most Bitcoin hodlers do, there's no reason to sell out your Bitcoin holdings regardless of price until you see a macro condition change. And it looks like right now, based upon the macro environment and what the governments of the world are doing and central banks are doing, there's really no reason to sell your pristine collateral, no matter what price hits. So yes, you can certainly write calls against it if you're trading options. You can sell futures against your position or do all kinds of things to hedge yourself. But I think it's very wise at this point, given what central banks and the governments of the world are doing, to keep a strong core holding of Bitcoin as that pristine collateral. So weekly chart, as I mentioned already, inside bar up on the week. This price pattern will get negated if you break below that low. That trade will get negated. But ultimately, until you see a break below there, this signal setup is still in effect. So Bitcoin's still very strong there. I'm just going to redraw the monthly levels because we are now done with the month of March. This is the bear case. All right, so if somehow the sellers this coming month can step up and break below March's lows, that would be significant. So here, if all of a sudden we drop and dump 30% and break below March's lows, that would be very significant, and I'd be concerned about that because you have a red week, red month, or a red quarter, and I'd actually be taking Bitcoin shorts at that point. But still, again, not messing with the core position in my long-term holding, but we'll be trading against that or around that to the downside. Until that happens, the bias is still the upside on Bitcoin. Ethereum this past week hit all-time highs. So ETHUSD cracked at that 2,000 level. I've been saying 3,000 is a fairly I think is a fair conservative level. Bitcoin 100,000 is I've been saying that in other videos. I think that's conservative now. You have the big banks on Wall Street now calling for $200,000 prices, $300,000 prices. I don't need to try to predict where it's going to go. I'm just basing it based on sentiment. If you recall, just a month ago, 100,000 seemed like a lot. So 2,000 or 3,000 on ETH seemed like a lot, but now I think people are calling for higher prices. I'm just following price at this point. When you're in a raging bull market like this, price can easily overshoot because at this point here, if sentiment gets very frothy and we see more and more players jump in, then who knows how far these markets can take it. These are awesome markets to trade. So Ethereum starts the month off going inside month and up. So that's very strong there. The only way this gets negated if it goes inside month up and all of a sudden turns to an outside bar. But once again, what we know about outside bars is that doesn't mean the world's ending. We still need to see the next month, next month, right? Because this was also an outside bar, right? Back in September, that looked kind of bearish until that happens, and that turns into an outside inside, and you know the rest of the story there. You get 1, 2, 3, 4, 5, 6 green months in a row. So yeah, right now Ethereum, you got to be long Ethereum, and you can obviously take profits along the way, but the bullish bets need to be, or the bets have to be bullish to the upside. So here's something I'd want to watch out for, though, if you're a shorter time frame trader, is you do have to watch for these momentum conditions, right? So when you have a Momo up situation like this, Momo up, you're going into Bollinger Bands as well. This is pure momentum, right? So what do we know about momentum and the Bollinger Bands is that as soon as you break below a par bars low, that's a Momo up reversal short. That means the Momo up got extinguished, and now it's a short. So you only I call it a short because that would be a short signal. Doesn't mean you're going to get short because you could have time for misalignment. You're still trading the above the quarterly open, above that monthly open. So this is still looking like a green month, green quarter. But here you have to watch out a bit because price is getting extended. This is people chasing, and so it doesn't take much to then stop out those guys who are chasing. And this is what I call poor market structure. If you recall, if you've been watching these videos for some time, you saw what happened in the Qs on the Russell. Several months ago, we had that big price correction because we had poor structure. So at this point here now, we have poor structure happening here on the daily chart, but not yet on the higher time frame charts. Not unlike what we had on, let's say it was the Qs. Yeah, here. This is poor structure, right? So we had this Momo up move that got extinguished right there, right? And also we had this big collapse to the downside. Big being relative, obviously, a 10% correction on the Qs is a 10% correction is relatively nothing in the crypto space. But we can see what happens is that when you chase price like this, and you get that Momo up reversal short, it collapses, and anyone who gets long here will get stopped out, as we saw in this price sequence here. So this is on the weekly chart, which makes it more significant. On the cryptos chart, we're not seeing that yet with that poor market structure. Yes, on the daily time frame, we're getting some poor structure because people are chasing. But on the higher time frames, if they get a pullback, that's actually be healthy. You stop out those weak hands, come back in this level here, maybe consolidate a bit before you head higher. If this chases back, if it keeps running back up here again and runs up and melts up, then this will be again, you have to watch out here if it cannot continue to go. So this is the scenario here with Ethereum, right? We had a multi-week Momo up move. I think I've shown this before, but again, just to get your head around it, I'll just show it again. Momo up, right? No lower lows. This is a Bollinger Band walk with no lower lows on that weekly chart until that bar. Remember that big sell-off on Ethereum? This is, I think, in Jan. This is the mid-February, I guess mid to late February. That was a minus 26% move, right? That one bar stops out all these folks here, right? Who got in and chased Ethereum, but they basically fight back by creating the inside bar, and now we know what happens. Inside bar down, inside bar reversal to the upside, and boom, back to all-time highs. I picked up some Ethereum this past week. What a fantastic trade on Ethereum. Maybe I'll show it on the 12-hour chart. Right here. Outside, inside, down. There's your inside bar reversal, back to the upside, and that was a close to plus 8-hour move on that move there on Ethereum. So it's a fantastic move. Congrats to the guys in my trading room who caught that move. I know a couple guys did catch that trade, I think on the same time frame chart. So congrats. This is why cryptos are trading cryptos is so fun, because the ranges are so large, and so when you're right, you're really right. And the way you compound that is by being long multiple coins because of the correlations. All right, so one final chart before I wrap it up. And I want to show you something, guys, before I sign off here. But the final chart is this one here, shit perp, right? So this is the chart that I've been showing over the past few weeks. This is an index perpetual futures contract you can trade on FTX is the exchange, one of their custom index futures products. But this thing is going Bollinger Band walk to the upside. So this index here tracks a bunch of lowly altcoins, and it just shows you that it's been alt season over the past few weeks, right? So Bitcoin, even though it's close to 60K, hasn't been doing the big directional move that we've seen in some of these altcoins, which I've been long of, names like Tron, Filecoin, Man, the list goes on and on. Some of these moves we've seen 100+% moves in these names. They've been rocking, and that's because of this move here, right? It is going Bollinger Band walk to the upside, range expansion. Question here now is, how far does this thing go? Because now it's getting a bit extended, right? This is a little iffy here now, because we know the Bollinger Band walk, if it breaks below there, people are going to get stopped out, because this thing's going to come down. I'm not saying it's going to come back all the way through this range again, but certainly any near-term pivots will get taken out. At the very least, that pivot's going to get taken out. So these folks here who are chasing, and maybe this is their first bull run, they're going to get spanked because they're chasing. So just be aware of that. If you're long a bunch of shit coins, watch out if that price chart breaks. Okay, but on the monthly chart, look at that monthly chart. It's Momo up on that as well, right? So we certainly know this is range expansion. Range expansion because look, the bars are actually getting bigger. Each one's bigger. That's plus 45. That's plus 69. That's plus 140. So I had a 140% move there in the month of March for those shit coins. So yeah, here now, I'm not calling for a reversal, major reversal here, but at the same time, you are trading on a red month, a red quarter to begin Q4, to begin April. Something to watch out for now with the shitcoin market here, as you have a little bit of, I would say it's a little bit frothy, getting a bit extended. Not trying to call top here. Okay, so one final thing I'll share with you guys. I discovered a fun little project. I think, yeah, it was this past week, maybe a little over a week ago. I came across a new social network. This is all the rage now. If you haven't seen it yet, it's called BitClout. So I'll open up my BitClout page now. And if you haven't checked it out yet, it's a fantastic little new social network. Getting very popular. If you're an early adopter, I definitely recommend, well, if you consider yourself one, I recommend checking it out. Head over to bitclout.com. And if you don't know what it is, basically, it is a new social media network powered by Bitcoin, which allows you to basically make bets or to buy user coins. So you can make bets on the actual platform itself by buying the platform's coin called BitClout. And you can see there's actually users on there which you can bid up or sell. So some of the popular users would be, well, the ones with blue checks are verified names from Twitter that are actually on the platform. We have a few other celebrity names that are not on the platform yet. We can actually trade their coins. So the Elon Musk coin is trading at 90K. So a lot of people betting that's going to get to 100K. But you can get on there yourself, and actually, I think it's a fantastic platform for traders, because we think of everything in relation to price. So here you can actually find your favorite users, your favorite content creators, your favorite artists and personalities, and buy their coins and try to get price appreciation, or sell their coins if you think that they're oversold. Although I don't think you can short people yet. I don't think that's allowed. But at some point, I think that will be a possibility. So again, it's a brand new marketplace, brand new social media networks. I'm not advocating people go on there and risk their life savings, but definitely a fun place to check out. There are obviously some risks here, as this is not it's a brand new project, probably less than a month old. But this is if you're an early adopter and you don't mind taking a bit of risk, you can actually get in here now and actually be part of something right from the ground floor. And there's actually some very interesting plays out there. So you can find me under Houston Trong. So there's my name. Go to bitclout.com. You can search for my name there, and come support me. Buy my coin if you like the work I'm putting out here. And I'm going to be playing with this coin myself, playing with my coin myself, and buying my own coin. And for the folks who are following me, if I can get enough followers and enough folks buying my coins, and then who knows, maybe I can drop some exclusive content to folks who follow me on that platform. I'm also sharing ideas intra-week as opposed to just doing these weekly videos. Throughout the week, as you see, I've been pretty active on BitClout, because to be frank, it's actually very addictive. so that's the fun thing with this platform. And you don't have for now anyways, you don't have the negative trolls and the negativity that you find on other social media networks like Facebook, which I'm no longer on, and Twitter, which I only post sporadically. So if you like, come over, support me in the coin over at bitclout.com, and again, hope to see you on this platform. Give me a shout and I'll make sure I follow you there. All right, well, I hope you had a fantastic trading week. Once again, thank you for tuning into the videos. If you like the videos, again, hit like on the YouTube video, subscribe on YouTube, or head over to thetradingedge.org. You can subscribe there to the videos. And if you want, as I said already, head over to BitClout, support me there, and who knows, maybe we can find something fun to do with this platform. I can either share some exclusive content with the folks who follow me or buy my coin, or find other ways to add value. So that's a wrap. I hope you have a great trading week, and as always, be safe, trade well, and happy trading.